Hi, this is Randy Finney with Right Side of the Chart, and this is a early session update for Wednesday, January 12th, 2022. I'm going to touch on a lot of things and not go into depth in any one thing. I want to do an update on the equity markets. We'll look at the stock futures and ETFs briefly, key levels to watch there. Then I'm going to do an update on the cryptos that I've highlighted recently, Bitcoin and Ethereum. Then hit on some of the ag commodities, wheat, soybeans, sugar, crude oil. Well, those wheat, soybeans, and crude oil. I'm sorry, the wheat, soybeans, and sugar. I'm looking at my list. I had everything not in order here. Then crude oil and natural gas. Update on the Treasury bonds. Might loop in cover corn. I need to add that back again. I'm sorry, guys. I had things written out of order in my list to cover today. So we'll do corn with the ag commodities. And then quick update on gold, silver, the euro, and the dollar. There's obviously there's levels of note and some developments on each and everything. That's why I'm covering so much in this video. I just wanted to get it out to you guys quick before the day got too far. Anyways, we're looking at Nasdaq 100 NQ futures, and we're right at that 1600-ish resistance. These are lines that have been on this chart for a while. We're looking at the hourly chart. So you have reactions back here, reaction low there, quite a few reactions around there. Little reaction high there, and so that's the level I had, but I have this one color coded yellow. This one's even more significant right there, and I say that because just more of an eyeballing thing of how we traded, and you can see once we broke that level, that was 16,133, about 134, we had impulsive selling. So a lot of times when we've moved up there through there, impulsive buying when we broke above it, impulsive selling, it just seems to be a pretty significant level. And again, anything is possible, but that's where, the more we go up from here, and even through that resistance we're at now, the 1600-ish level, the more it chips away at the bearish case. I have to say, my read on the markets, we broke that level, and then that was a level I was waiting to see happen. It was impulsive. The buyers stepped in. I did talk about it and even went long at the bottom there, but for a bounce trade, the buyers came in, and it's been pretty aggressive. So in other words, I'd hold off. I would wait and see if I didn't have any positions right now, kind of wait and see what the market's doing. I'm not crazy about the bounce. Now, it hasn't exceeded a typical counter trend rally yet. And again, keep in mind, this is the nature of the beast lately, of the market. It's had these pretty strong rips and dips. Volatility's high. It is still peaked. The Nasdaq 100 is still well below its top back in mid-November. But again, the fact that the sellers didn't step in here and the buyers didn't exit or at that next level, this gives me a little pause, but I want to just say it has not in any way, shape, or form, especially on the daily or weekly charts, eliminated the bearish case. I'm just kind of watching, and I want to see soon the sellers step in and start seeing those levels that should act as support on the way back on any pullbacks. I want to see those levels get taken out. And again, a big thing would be to see another drop below that 15,536 level right there. And of course, that's, I think, would be the nail in the coffin to see those lows, the recent lows, taken out there. But that's it. So the story is we're at resistance. Let's see what happens here. I'll do another update. And if we take out 1600 with conviction, then about 13134, 135 is next resistance. And that's really a level that will start to more rapidly undo the case that we're going to have another big leg down, and that that big 20+% correction that I've been talking about for a while. All right, so let's move on to ES. Not spend too much time on NQ, but it is the one that I'm focused on the most. But of course, we need to watch the ES, S&P 500 futures. I'm going to queue those up here as soon as I can find them. And there it is. ES, S&P 500. Big thing was this trend line, which even starts to the left of the chart there. We came in, we hit it the other day. We also hit price support. And like all the indexes, on the futures, we had positive divergence on both the PPO and RSI, my go-to indicators. And that divergence is playing out, and it's playing out so far for a pretty impulsive rally. Remember, I marked that level 4,700 as a pretty significant level, in my opinion, where it's not the previous high, but it's a level where I think, again, quote unquote, that sellers should step in if we're going much lower. So we're right about there now. And A minute ago I said, look, I would wait and see if I didn't have any positions. If you didn't have anything at all, I mean, you could make a case to short here, certainly, and then you could keep a tight stop. If you have positions, if you're already short, you may not want to add to, because it depends on where you shorted. I don't know if you're trading the ES, that would have been a obvious sell signal right there, the breakdown below that level, and you're back to where you started. So you could certainly double down on your position or just hold off, see if we get a rejection. And then look, it's not so far below. It's just a relatively small drop to get back down and take out that trend line. About a 2.5%, maybe 3% would take us, a little over 3% would take us back to that low and take us well below the trend line. And that would be, I think, a very ideal time to add to any short exposure. So that's that. And then the Russell 2000, I wanted to give you an update there as well. RTY, or your futures for the Russell 2000. And again, all the indexes, the large caps, small caps, they all recently put in those divergent lows right there, bullish divergence. But I will say it hasn't played out for nearly as much. We're looking, this is not a 60-minute chart, it's a 2-hour chart, so a little bit longer time frame we're looking at. But if you recall in recent videos, I've showed you that IWM and RTY, you're sitting just above a major support level, a multi-year trading range that's down here at about on the futures, it's the 2090-ish level right there. And that's what really, to open the door to that much bigger drop, needs to get taken out. As of now, we put in, remember, a big divergent low back there. We rallied up, put in a small divergent high. That gave us that correction, put in a small divergent low. So the bulls want to see this level get taken out. And I will say that's going to be pretty darn bullish for IWM if it happens. That's about 2280. However, we're still well off the highs. So it's anybody's game. That's the takeaway here. This was a breakdown sell signal right there, and it was a divergent high as well. I don't have the divergence marked on this time frame. There's your divergence, and we've been moving lower, and that's why this is a pretty important level, because you have some key reaction highs there, and that's where, again, ideally any counter trend rally should be contained to make the case that we're going to take out those recent lows and go much lower. Any break above there is going to take us up. We're not far from the top of the trading range if that happens, and then maybe head on to new highs. I don't think that's going to happen, but if it starts to happen, then you have to respect it. Okay, moving on. Let's look at the cryptos. Before the cryptos, I'm not going to go over each and every one of the ETFs because I've done that lately. Remember, this is a level I've had for a while, pretty big level, 390 on QQQ. And I just showed you at the beginning of the video that NQ was at resistance, so, and QQQ is as well. You have a big old gap back here, you have reaction lows, big old gap right there. Again, another spot where the sellers should be stepping in, and you also have a near-term uptrend line which could do the trick to trigger some selling. So watch that, replicate that trend line, and watch that level there, because if we pop it, we're probably going up to 393, and that would be comparable to that level I started out in the NQ 60-minute chart, where I really don't want to see that taken out. Otherwise, I'll probably just start scaling out of swing short positions at that point. Next up, Bitcoin continues to look good. This is the Bitcoin futures. That's my go-to chart, because it's going to give you a more accurate reading of what Bitcoin's doing, and trading more around the clock. GBTC, if you don't trade futures, you can use that. Or maybe you're a crypto person, you have a Coinbase account or something, you can buy Bitcoin through that directly. But these are the futures. That's my preferred trading proxy for Bitcoin, and there it is. That's that big level support. I talked about it way back here after we had a sell signal, that if and when it got there, that's where I'd be loading up, and that's where I'm still happy getting into Bitcoin with. Now here's the thing, we already had that little false breakdown, right? The little whipsaw slight move through there, and we regained it. So there's a good stop level. We have no business now taking that out. Doesn't mean that you can't take it out and do this. It just means probabilities, odds. That's what I look at. So that's where my stops will be. We're already up about 15% on Bitcoin. It doesn't look like a lot here because the scaling is so big. Bitcoin has such big moves. 28,000 down here, 70,000 up top. This is log scaling I'm using. So it's a 15% move in the last few days already. Target's still 44.75, 44.745, and then 47.500. I may tweak that one. That's an old level. These were levels I had on the way down, but I think we can swing back up here to that this resistance level here, resistance zone, about 52.370 to 53.528 or so. That's an ideal swing target, near-term target. And I'm not going to be straight up, but that's it. So nice risk reward on this one, and still not too late. Maybe if you took it on the pullback to 41.40, 484, and/or the recovery, as I said the other day. When you break a support, if it's a momentum field overshoot like that, then I like to hold off, wait and see a recovery back. So that was two objective entries recently at the level, and then when we recovered it, and we're not too far above it now. So looking good. And then if you don't trade that, of course, you have your GBTC, first to market ETF type instrument, and that had just nice divergence in place on the 60-minute chart recently. And again, moving up, but you're going to show, this shows trades 9:30 to 4 p.m. So it's only shown about a 12% gain so far, but still real decent. And didn't hold that 31.74 support, but reversed here. And again, it's all about, that's why I like to look at the futures. The futures are a more accurate and important chart to follow than these instruments like this, because GBTC can trade at a premium or a discount to the actual net asset value or what Bitcoin is worth, and so therefore the chart is not as accurate as the futures. Next up, I gave you ETHE. You can do ETCG or ETHE, which is my preference. And that one also had a one-day overshoot of that 2661 level. And I recently gave you a scale in from there down to the trend line and not below that would be your buy zone. So we pretty much got into the top third or so, and reverse so far. And keep in mind that reversal coincided with the reversal in Bitcoin. These guys, birds of a feather, flock together. Even though these are competing cryptos, they tend to move together in sync. Just about all cryptos. Day like today, most of them will be green, whether it's Cardano or Dogecoin or any of the other crap coins. And this one's up about 25% so far off that low, and from the 2661, that was my preferred buy level recently. We're still up. If you took it there, you're up about 14%. Resistance coming up 3150, and this level, I think a little bit above there actually will be your first stop. A little bit above. That's about, what is that, $32, that line above it? 32.50 or so. And then also watch, we might get a downtrend line that may come into play here as well. So if you're looking for some near-term targets, that's it right there. So you get a quick 20, 25, 30%, or depending on where you bought it, maybe even more, and you hit that level, probably get a reaction there. You can either take profits as an active trader, or hold out and swing for maybe the next leg up in these cryptos. Inflation's hot. They just reported today, and we know this. We're at 40-year highs in inflation, 7%. Last year's annual rate was about 7% or something like that. The hottest since 1982. It's crazy. So anywho, you're going to see money moving into these alternative assets, and gold and silver, which I'll get to in a minute. All right, let's move on. Got a lot to cover. I'm going to go through only the futures just to save time right now on these ag commodities. So here's your wheat. Showed you the other day. Wheat had downtrend line right there, positive bullish divergence, actually building for a while, so pretty big divergences. And then this little price channel we broke out, and give you targets. I think we can run up there at about 822.745, but you want to hold above there. You might want to consider a stop under that 733 300ish level right there. Next up would be soybeans, ZS. Let me find that for you. Yeah, it's right here. I gave you that as a setup the other day and told you trigger an objective short entry on a break of the wedge, and then again on break under 1371 300 right there. So we broke the wedge, hit the support level, back tested. We're kind of in no man's land right now, smack between the wedge, which is resistance, and the 1371 300ish support. So we need to take that out, and that would provide an objective add-on or new short entry and swing down here. Targets remain about 13,339.5. And or the next target actually is also the uptrend line in about 1297. They should come in together if it plays out like this and come down there. So that's your setup for wheat. Negative divergence there. I'm sorry, soybeans. And SOYB is your ETN for soybeans. I already covered wheat. Let me do sugar. Sugar, obviously pun intended here, has been a sweet trade for us lately. Let me dig that one up. Here it is, SB. And that's it. I mean, gosh, look at these, all these, and I don't even have them all marked. These, buy signals, the white lines, the pullbacks to the low-level PPO crossover, especially on or around this white line, and the RSI hitting that 20-ish level as well. So that's good for so far about 4.5% bounce in sugar. And only thing I've done since the last update is added a potential trend line here. It's probably going to come into play. So if you want to take a quick buck, do that. Otherwise, like I said, you can hold on and wait for a high level, bearish PPO crossover that occurs above the zero line. That's these red lines marked here, and also or a run up to hit this 86,275. That seems to be about the extreme level where you get overbought, and that's usually where sugar tops. So probably more upside, but I'm guessing not straight up. Probably a pullback first, and then another leg up for sugar. SGG and CANE are your ETN alternatives to trade that track sugar futures. And then last but not least in the ag commodity arena would be corn. I'll give you an update there. Highlighted corn as a short trade idea a while back, and it's playing out, but it's just taken forever to do so. And then that ZC. All right, so you had a divergent high here. I think that was pointed out, but then you had this longer uptrend line. Put in a second divergent high right there, and then took out that minor trend line right there. Moved down, then finally took out the trend line. Back tested again, rejected. So where we're at now, we've had multiple sell signals, and we're kind of again going nowhere. But here's the levels that I think are most important at this point in time. You have a support level here at 597,300, which we're dancing on right now. I see enough reactions there. Yes, we've traded through it several times recently, but we've also respected it on that's got to be a half dozen or more reactions more recently there. And you can see the indicators are flattening out, so they're not telling us anything, and that's normal when you get this right here. This would be, so those are levels that I think are most important. 597,300 in this symmetrical triangle pattern. That's what happens when you get in a triangle pattern. It's an indecision pattern, and you need to respect whichever way it breaks. So it's very simple. Whether you're already in this or not, whether you're long or short, upside break of that, especially impulsive, should be bullish. So you might want to have stops above the triangle or go long if that's your preference. And if you're currently short or looking to get short, you want to add on or you're long, you want to either get out of your longs or short position or add to a short on a break below 597,300 right there, because that's just below the bottom of the triangle. So again, that's where I think we're going to go. And I know those are, they're all different ag commodities. Some I'm bullish on right now, some I'm bearish on, and this one I remain bearish on. And I think we'll swing all the way down here, ultimately to 553 if we break to the downside. But I stops along the way at these price targets: 581.57, 571.5, and then 553. Those are your targets for corn. And the ETN, very easy one to remember, CORN. That's your ticker symbol. Okay, let's go to crude oil. Crude just continues to power on and just build these divergences. Remember, we had a divergent high right here recently. That was a bearish rising wedge. We got a breakdown, but then, as I said, we had key support just below it right there at 77.65. Lots of reactions on that level, and we failed it there. We had a big drop. We came up recently, tested again, broke above it. So it's still a big level that needs to be taken out. So when we had the breakdown of this uptrend line, the problem with it, you had a BOD or benefit of the doubt support level just below it at 77.65. We hit that. We had another thrust up. Now all that's done is extend the divergence, and we're coming up. There's big resistance there at about 83.75. So we may work our way up there, and if we can keep that divergence in place, it's going to give us a nice objective short incher add-on right there at 83.75. At the very least, I'd expect a pullback trade, and quite possibly a lot more. We'll see what the market does. Crude's holding up because the stock market's holding up. Natural gas broke out. I've been highlighting this one for a while. Gave you a setup here on a break above 3,928, that yellow line. It's been a nice resistance, top of a basing pattern recently, 1, 2, 3 distinct reactions, and then pop. We took it out, and we're up almost 5% today, and that's it. So that's an official or an active long trade. I give you a stop line. There's an uptrend line as well as a fallback below. This is where I'd have stops right here somewhere if you took the breakout. And we're coming up on my 4,207 first target, so call it 420, and then I still think we'll swing up here to 445, and that's where I'd be interested in taking profits if we get there. And the 30-year bond, ZB, Treasury bond futures, or you could trade TLT as the ETF. There's your positive, aka bullish divergence. There's a breakout above the downtrend line, the falling wedge, as well as my 155, 173 resistance level. And so far, so good. Still think we'll work our way up there at least 157.096. That's the first target. And you can also trade if you want a little less volatility. Typically, ZN, the 10-year. It's telling me the same thing. You had the same steep downtrend line, same bullish positive divergences, in the same breakout, and you're coming up to that first reaction low there. I don't have this one marked up for targets, but let me just give you one, a potential swing target here. And it's going to help to see the equity markets turn down. If we continue to rally up, punch through those resistance levels I gave you in the beginning of the video in the equity markets, typically that doesn't bode well for treasuries. But sometimes treasuries will do their own thing. There's a lot going on with inflation right now and the interest rate environment and everything else. So trading as I usually do, I'll trade treasury bonds on their own technicals, not what I think is going to happen or what is happening with the stock market. It does factor into my analysis, but at this point in time, if nothing else, it's been a hedge. Long treasuries and short the equity market. So the equity, trades are down and the treasuries are up last couple days, and so is crypto's up. So that's why you want to be diversified. You never know which ones on any given day are going to be up or down for you. So it helps to smooth out the bumps, just like investing in a long-term portfolio. Don't put all your eggs in one basket. Next up, and we're almost done here. Let's go to the before I get into gold and silver, and I'll just show you what's going on in the currencies, because that's what we've been waiting for. That's why gold and silver have been grinding around. So we finally got that breakout. Forever and a day I've been saying let's watch 114 in the euro. We had a beautiful bullish falling wedge pattern with positive divergence. We got a buy signal in the euro back here. And we did. We ran up and hit my first target, and it was that level, the 114.09. But since then, we've just been kind of consolidating. It looks like an EKG here, although that EKG or that there's an uptrend line. So we've been basing. This is like natural gas, and same thing. And there's our breakout. So we just broke out. So let's just go on, take it on face value, and assume the breakout sticks. That should take us up to my targets here. And ultimately, I still think we're going up to that 115, 170. If that happens, if I'm correct on that, then that should be bullish for gold and silver. If we fail to break out, well, then you still have this downtrend line that should act as support. So as of now, the breakout's intact. So this is my preferred scenario. Let's see what happens. And the dollar is basically an inverse of the euro. And you can see here that's the same level. We had just like the euro had the bullish falling wedge, the dollar had the bearish rising wedge I highlighted on this 60-minute, or this is a 2-hour period chart. We had a breakdown, sell signal, and then from there, same thing, just like the euro, we consolidated, and the level we needed to take out was the bottom of that range at 95,560, and boom, check mark today, breakdown. And it's been, I talk about this quite a bit. When you have these extended periods of consolidation, they're clean and tight and everybody can see it, usually the breakout is pretty powerful. That builds up energy like a coiled spring. So we are coming up. This is a downtrend line I've had on the dollar for a while. It goes to the left of this chart here. We could get a reaction there, and that's what could cause either a back test or even a possibility of a failed breakdown, whipsaw. But as of now, it's a breakdown. Let's take it on face value, and that should bring us down to my targets on the dollar, 94.60, and then ultimately down here about 93.505. Again, gold and the dollar inverse. So if this does play out, then you would expect gold and silver to rally. And although intermediate term they've been grinding around for a long time, near term they still look good. They're moving lately. And again, this is the breakout in the euro and the breakdown in the dollar today. If they stick, that should take us up to my next target, 840.69 in gold, and ultimately quite likely a run at these old highs and maybe beyond. Sooner or later, gold will probably break out of this longer term consolidation. It's in what I believe to be a bull market consolidation phase. So that's what gold looks like. And then silver, like silver both near term and longer term. Silver's again, I think there's a big disconnect right here. I think the markets are mistaking gold as only a flight to safety asset, and with the stock market being near all-time highs, it's not getting the interest that it used to get. But when you look at silver and gold, they're both industrial metals as well, and silver especially, and gold, but both of them used in electronics. You have this whole push towards green energy and electric cars, and that's going to create demand. You're not seeing the inflationary forces. We're seeing inflationary pressures on every other commodity. Even copper's running lately. You have crude oil challenging multi-year highs, everything, and so ag commodities. So sooner or later, I think silver and gold are going to play that game of catch-up and reflect the fact that we are in the most inflationary environment we've been in decades, 4 decades now. And so I think the longer-term potential is big on these guys. But in the near term, they're in a trading range, big trading range, and you can swing them. They're more of just like commodities, kind of be in hit and run mode right now, and just trade the near term outlook. Swing trades off these 60-minute and 120-minute charts, and ultimately when we break out of the recent trading range in gold and silver, that's when longer term investors can maybe layer in or add to their long term positions in gold and silver. Okay, not bad for the number of securities I covered. It's 27 minutes in this video. And again, that's not everything out there, but most of the trade ideas I've been highlighting in various asset classes, stocks, bonds, commodities, and crypto. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.